Evening, whatever time it is, wherever you are. Welcome to another episode of GBPUSD charting. So, today may be a little bit of a longer episode, simply because I'm going to go over the sort of high time frame, the lower time frame, my Elliot Wave theory count or prediction, or to see what it is. Yeah, it will be a slightly longer one than usual, but without further ado, let's go. And hopefully the sound is a lot better today, a little bit louder. I've made some setting adjustments. Okay, so let's go. We can see this is the high time frame, so it's the middle of the month, so I haven't started with a clear blank sheet. But just going to see if there's anything else to add. So obviously nothing to add to the monthly in terms of it. We've still got these monthly above us. We've got this monthly here. I mean, we've gone through it, but I don't see any point of really adding it on because we've just gone through it completely. But it could still be a solid level of support to an extent because we did hit it as support and go back up. But went straight through down it and we've sort of coming back up to it again. So it might be worth just labeling that as a monthly, just for sort of historical purposes, really. Okay, let's put that down as a monthly. Okay, so let's go down to the weekly levels. Let's get rid of the monthly, just to make it nice and clean. So we have a weekly here, which we've sort of like breaking out here as well, to be honest. It's the same, almost you could say the same level, and we've broken through it. So there's no point in recording that one. Above that, we don't have any weekly. We have this one here, but we've gone through it. The next one is around this area as this zone, but that's, we've recorded it as a monthly. But then we've got this fair value gap, or just whatever you want to call it, which means we should ideally, the moment we are starting to clear it really, is that we should pump straight up to around this zone here, the 1.30237. Now I want you to keep that in mind, the 1.30237 weekly, because that will come back later once we put in our other confluences. And data level, oops, let's put that into monthly. Did we check on this weekly? Yeah, we have. Today, this recent week, weekly of yesterday, that's on there as well. Daily levels, let's go to weekly, daily. So the chart. So we've got quite a few dailies here, but I think the reason why I have them is usually for day trading, but I can get rid of them because they're no longer sort of valid, especially the ones that have been gone through quite a few occasions. That's fine, but we've sort of gone through it. The reason I kept it is because you can see here is resistance, went through it, we tested it, turned into support. Same here, same this daily, you can see resistance, 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 and then turn into support. So we'll leave this one, as well. We'll leave this for a long time, a while ago. And we've got this daily up here from quite a while ago. That's, you can see resistance, 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 we've gone through it, and we've broken through it basically. So above us, in terms of daily, we literally have no daily here at all, honestly. No daily, nothing at all. So from here, everything is pointing towards heading back up to this monthly at 1.29, and then I'm sure we have the weekly up here at 1.30, which comes into this sort of zone. Okay. But as you can see, there's literally just a gap to, I mean, even this monthly was sort of really, clutching at straws. I don't see how it will hold. We might have a little bit of a reaction, but more than likely we are going to head for this weekly at 1.30. It's also a psychological level as well, 1.30, more profit taking. So yeah, that looks a very, very interesting level. And then we can do, let's go for the daily trend line. See what's coming up from there, see if this is still holding. Let's go with that, and reset the chart. As you can see, this is still holding very, very well, this daily chart. We've drawn it from a while ago. Yeah, still holding well. Still nothing really closing below it. A few, but we've gone back into it. Here was a very, very good confluence, and then we've really, really pumped into it. And then if we go to turn on our weekly level again for that 1.30, oh, surprise, surprise, it's at the top of the channel. So yeah, we could, I mean, although it looks like we could just hit it any day, there's no reason why we can't sort of go sideways and then hit it. But we could just go straight through as well, to be honest. So, but yeah, the 1.30 is still looking very good. And then if we had a 4-hour trend line, which is still going okay as well, yeah, that's still pretty much holding up. But I would say more than that is the daily one that's really important. Okay. So now that we've seen the monthly, weekly, daily charts, so what's our bias? Well, if we get rid of that, get rid of all these for the time being, and then zoom out and start off for the monthly level. So what does that look? Well, still looks bullish. We've had green, 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 and red, which you could say is a healthy retracement, and then green followed by red, but yeah, generally in the middle, nothing really too bad, and then green. So we're still looking very, very bullish in terms of monthly candles, and similar case with the weekly as well. You can see we're still pumping up, and daily, again, same with the daily as well. Like there hasn't been a market structure change yet. We still haven't had a lower low. We've still just had lower high, higher highs and higher lows. Higher high, higher low, higher high, higher low, potentially a higher high. Well, we've already made a higher high, but a higher, much higher high. So we've seen that. Now, the other question is, we were talking about that weekly that we've got. So let's add some confluences to that, right? So this is from, again, really, really high time frame. So if we go monthly chart, you can see we've gone from this high back in May 2021, which is relatively the recent high-ish that we've got, all the way down there, and you can see we're starting to come across. We've gone through the 618, we're coming across the 66 level and the 0.770 level, which is generally where the retracements start from. And if we add our weekly chart to that, you can see we've got that there, the 1.30, just below the 0.7%. So between the 66 level and the 0.70, you've got that weekly. So again, that zone works out to be a decent amount of, you could say, resistance level that we're coming into. So yeah, that would definitely look towards a short from there ideally. And then as you can see here, we've got these weeklies here, monthly here, that were support, support, support. So what happens to support once once you break through downwards, they turn into resistance. So around that zone, remember, not exactly this level here, 1.29, but around this level, which is a zone. So the 1.30 again seeming to be quite interesting level. So we've got, so our constances so far are, we have the weekly, right? We've got the monthly as well at 1.31, but I think that's a bit too high. So we've got the weekly there, and we've got the Fib retracement at the 0.70. Then we've got also this turning into support, turning into resistance. We've got those levels there, so remember we could just hit that and come back, or just hit it a little bit, go up to the weekly, go above the 1.30, the psychological level, and then come back down from there. So those are our confluences so far in terms of what may well happen. And of course, we have what do we have in terms of news-wise? So tomorrow, well, now it's today. We have 7 o'clock today, Tuesday. Average earnings, index plus bonus, which apparently is supposed to high volatility expected. So if this is positive, we should get the pound to pump. If it's not, then obviously the other way around. And in terms of US, nothing really exciting today. And then tomorrow, so Wednesday, we have Treasury yields, mortgage rates, mortgage, core CPI, ladies and gentlemen. We have that for the month of June. So that's very, very interesting because that will potentially decide how the Federal Reserve will decide on the interest rates. So whether they'll have more interest rates. So if this becomes high, the core CPI, so month on month is 0.3, excuse me, and the year on year is 3.1%. So if this comes up higher than expected, then the dollar will go up because everyone will expect a higher another interest rate increase, and the pound will go down. However, if this comes low, then expect the pound to just pump, possibly like crazy. Yeah, so that's Wednesday is a very, very interesting day. And then this week, so let's have a quick look at Thursday. Thursday, GBP, construction, GDP month on month. That will be interesting as well to see how the UK economy is doing. Yeah, and manufacturing. So a lot of UK data at 7 o'clock, so that should be interesting. That will really, really decide which way the pound is going to head. So I think this week is very interesting. And in US wise, we have jobless. So this is on Thursday, jobless claims, initial jobless claims that we are 248, 249. That will be always interesting. And the PPI for the month of June. So yeah, really, really important data. And then Friday, not much usually, but just sometimes US has some sort of interesting data, but nothing really on Friday. So yeah, Wednesday, Thursday are your big days. Let's expect lots of volatility and lots of progress in terms of pound. So this is where it's going to decide what's going to happen with the pound. Are we going to keep pumping up? Or are we going to have really bad UK data and good US data, and then we start to head back down? We could have both, really. I mean, Wednesday we could pump, and on Thursday we could dump, which probably makes sense in the sense if you think about it, like Tuesday, Wednesday. So Monday we've had pump, Tuesday pump, Wednesday pump, and then Thursday, Friday we dump. So that's quite plausible and theoretically likely. Now, the other thing that I want to go through with you guys is Elliot Wave, and I noticed that a lot of people do not go through Elliot Wave. They just avoid it. I don't know why. Maybe it's only the really good traders and then don't discuss anything on YouTube because they're so good at it. I was following this one person. Saw this person on TikTok talking about GBP pound, won't mention any names, and then they said, someone asked them a question, "Oh, do you use Elliot Wave theory?" And their response was, "I don't know what you're on about." Wow. It's like, how can you not know Elliot Wave theory? So my question is, ladies and gentlemen, is that are we in a wave 1 or a wave 3 or a wave 5? So the issue is that we had a massive dump, or a steep decline from, if we have a look from here. So we had a decline from 1.42 all the way to 1.03. So that is a huge decline in the value since May of 21. Now, if we were to say, okay, that was a wave 5 and then we're going to wave 1, the issue with that would be is that if this is, oops, okay, wave 2, wave 1, wave 2, wave 3, wave 4, wave 5, just for argument's sake at the moment. So if we were to say that this was wave 1, and then we're heading about here, and then wave 2 is here. So wave 3 is generally 161% of wave 1. That's the general Elliot wave rule. Now if we were to say that this is, let's turn that off, let's say if we were to stop even about here, right, about 1.30, let's go back about there. So that's what, 2,725, and then if we were to even, forget even trying to 161%. So let's do a little bit more of this, right? I'm just saying, like, even if we go to a little bit, this is probably less than 161%. But it takes us to $1.50, which is absolutely crazy because that would be like the highest for a long 40, 50 years, I think, Second World War or just after that. So that's absolutely crazy. I mean, it's possible, but I highly doubt it that this is what's going to happen, unless something crazy happens in the US and the UK suddenly recovers miraculously and the economy goes sky high, or they join the European Union. Highly unlikely. So that's why this one's out of the question, but this is unlikely that this is a wave 3, and then we've still got to have a wave 4, and then a wave 5 here as well. So either way, that takes us to crazy levels, $1.60. So this is why this theory is, in my opinion, obsolete. Now the other is that perhaps this downward trend that we had was a wave 3, and then now we are in a wave 4, followed by wave 5. Followed by wave 5 to come. Now that seems a bit more interesting theory, because if we do this, so we start off from here. If we say this is, it's 1, that's 2, this is 3, this is 4, and then with 5 still to come. Okay, so the reason why I like this a lot more is a couple of reasons. One is that wave 4 cannot go into the territory of wave 2, which makes absolute sense that if we were to extend wave 4 to about here, not entering into wave 2 territory, we would then come back down for a wave 5. Now this sounds a lot more plausible. The second reason why is that this wave 3 is what's called an extended wave. An extended wave means that it has literally 9, it has an extension, so it's the extended wave 3, and overall it turns into a 13 wave. So for example, 1, 2, and then we have 3, 4, 5, 6, 7, 8, 9. Look at that. Absolute perfect. 9 and then extension of that. So within wave 3, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. So within wave 3 should be 9 waves, and that's exactly what we've got. Do we have an extended wave one? No, they don't actually. Okay, so usually within wave 3 will be 5 sort of mini waves, but an extended wave is where it has 9 waves. So you can see 1, 2, 3, 4, 5, 6, 7, because we've had a bit of a bump there, 8, and then final by 9. And then now we're in wave 4, which will come out about here, because wave 4 cannot enter into territory of wave 2, and then we come back down for a wave 5, wherever that may be. Okay, so this is my theory, this is why I think this sounds a lot better and makes sense. And now if we were to add our weekly, oh, surprise, look at that, 1.30, around that level again, that 1.30. And then if we add our fibs as well, 0.70 level, so we're getting a lot of confluences around that 1.30 level. That potentially will hit that 1.30 and come back down for a wave 5. And if you think about it psychologically, retail-wise, if we hit 1.30, people are going to be very bullish on the pound, say, yeah, we've hit 1.30, we're going to go up, people are going to be bullish, and what's going to happen? We're going to head back down. Maximum pain scenario. So yeah, that is my Elliot Wave theory count for today. So this is what I think, why this level is very, very important, the 1.30 or about that zone. Okay. So I hope you enjoy that, but let me know what you think of that. Right. So the other thing that I promised that I would cover is my sort of day trade theory. So what are we doing in terms of, like you say, this is all good, but how am I supposed to take a trade now? I can't just long randomly in the middle where we are at the moment. No, of course not. So what do? So what we tend to do is, let's reset that. Okay. So for example, let's go 4-hour chart so we can have a look, see what's going on. So as you can see, we've just sort of pumped up and down, and then we want to see a good level for a retracement where we can take a potential short, right? So let's get Fibonacci on there. Let's go there. Yeah, that is on. Okay. So potentially at the moment we're looking at this zone here, and it makes sense as well. As you can see, we've got this quite a bit of a zone here. 61866 levels. Let's add on, see if there's any monthly there. Yep, got a monthly right bang in the middle. Not much in terms of weekly wise, not in terms of daily wise as well. But that is if we were to come back down to the 1.26 level. And the other alternative is that we look for something shorter for day trade really. So the way you work it is you start with a 4-hour sort of time, or you look at the daily time scales and see what's the larger time scale the levels, the more valuable and stronger they are. But when you don't, then you have to go for a smaller level. So if we were to go this, you can see we've got it at the bottom of this candle here. So anytime it comes back from here, this would be another nice sort of bounce where it could potentially go up from. Okay, yeah, as you can see, we've got a daily there, we've got the 6166 level, and the end and this zone as well. You can see that we've sort of turned into resistance, and we've then returned into support. We've touched it here, touched it again here, and then gone straight back up. So that is if it is to come down. Now, what about sort of even shorter time scale? So in terms of even more, like less than that. So the other way I would do it is, let's go to 1-hour charts. Okay, leave the daily, monthly, weekly on, so we know what levels we're working with. Okay, so we need to work out where the daily open is. There we are. So let's move this to here. That's where it opened. Okay, and the previous day value area high. So where was yesterday? So Monday. So high. So we opened around the high. So I would say yeah, the daily open and daily high is that, and the value area low is it's all the way down here for Friday. So today's value area low was around here. Okay, so this is what we're working with at the moment. So where would I take a long or a short? Now, in theory, you could just, because we're at the very high, you could say, okay, you know what, I'm happy with where we are. I think we're going to head down, just take a short, because your stop loss is wherever you want it to be really, because we're at the height of, at the highest level possible at the moment for the daily. Probably not the best stop loss, but reward is not good. You could say, look, I'm going to head it there because I think it's going to head back down, although we don't really have any confluences. So this isn't a very good short because we could just head straight back up. There's no red candles. You can't, it's not looking like it's going to go down anytime soon. So this isn't a trade I would take, and I don't think this is a great trade because what are your confluences for taking a short? Apart from just being at the sort of zone high, there isn't one. There isn't any. There isn't a daily level. There isn't a weekly. There isn't a monthly. There's not a Fibonacci amount there or level there. So I wouldn't. So it's not great. Okay, so it's just turning on these trend levels. Okay, so that's not very good. So the alternative is that you wait for it to, the minimum that you would wait for it is to at least hit the daily open if you want to take long. Then obviously the question is, where is your stop loss? Potentially below here. Then again, it's not a very, it's quite a large stop loss. So let's go. And then the trend at the moment is going positive, so you'd want a long ideally, right? And so let's go this. At least at the top of the level. The stop loss just below the weekly here. Again, 2.3, so not great, but not the best. So the best, in my opinion, would be if we were to come back down a little bit, which I think we will, around this zone here, just the daily perhaps, or just above the daily, with your stop loss being just below the weekly, and then with your target being at the top of this zone on the daily level, and potentially even higher up to the weekly. And this gives you a nice risk reward ratio of 6.47. So your support levels are your daily / weekly, because they're so close together, and then because we are in a positive upwards trend, we will potentially, as you can see here, we turn this into sort of resistance and then broke through it. So there's more than likely we're going to retouch sort of this whole level. Perhaps you could even say, argue, just do it here, really in the middle. And in that way, you're touching this level as well, which was a resistance turned into support now. So we're going to retest this daily, weekly, this level of support, and go back up as well. And if we look at fibs, all the way from down here to here, 0.382, which in terms of when being bullish, that is obviously bullish. So that's the minimum that you'd sort of have to take along from. So my trade play would literally be just to wait for it to come back down and then take this as a long position. So this would be my trade. And this makes a lot more sense when you put in the Fibonacci as well. So now you can see we're just above the 6166 level. I doubt we would come down all the way down here. So I think this sort of zone is where we would take go up from. So I think, yeah, this weekly / daily, anywhere in between there, is where I would long, with a stop loss just around here. It gives you a nice 7.8 risk to reward ratio. Now the other important thing is timing. So when do you take the trade? Now, for example, look here, what time did this, let's go 15-minute charts, just to give you a better idea, right? Now, what time did we pump, start pumping from there? About 1:30, 1:45. We took the trade. Well, I did take this trade because if you look at the time, if you look at, we were hitting daily. I think there was a Fibonacci here as well, 618 level or 66 level, no, 0.70 level actually, that we were hitting. And then, and look at the time, it was just before US Open, about 1:30 time. There wasn't any news, but that's when generally the reversal happens. So the reversal happens either when there's some news, so for example, news at 1 o'clock or 2 o'clock or something, and then something happened towards the pound being going up, or the dollar going up. That's when the reversal happens, or around 1:30, 2 o'clock, around that time, just before US opens, that's when a reversal happens. It's unlikely that the reversal happens any other time. It can happen, but generally those timings are the best for taking a trade. I mean, like we haven't, you'd say, oh, we hit the top and we come back down, but that was the end of the day and there was nothing going to happen and we're just going sideways. So I would wait for Tuesday, so today open, wait for London Open. London Open is when we might start heading down, and then we start getting, when we get to the weekly level around here, that's when I would then look to take my long position. Okay. Let's go back to the arrow chart. Yeah, so that long position that we just mentioned just a while ago. Okay. So that would be my ideal scenario. So the timing is also very, very important as to what time you take the trade. And then just to obviously keep you aware of things. So for example, if we start heading back down and then we do something like this and we start going back down, then I'd expect us to go all the way down to this previous daily value area low, take these lows, and then go back up. That's the alternative scenario if we do that. But I'm still bullish on the pound. I still think we've got legs up to go. We could have a little bit of retracement just like we did today to go back up. So again, come back down a little bit, go back up again. That seems likely to me. I don't see any other sort of, yeah. Okay, so yeah. I've got these daily, weekly, and then we've got below here, we've got this daily. This is sort of in the middle of nowhere, really, in the sense that it's not, we've just gone through it. Although we do have this turn into resistance, resistance, turn into support, support. So we do have this daily, which would potentially be a better line than the one that we discussed just before. But I think if we were to head back down to 1.27 level, potentially we're going to head a lot more down, because then that would start to become a lot more bearish scenario, to be honest. So I think the best possible scenario for us is to come down about here and then sort of head back up. So do something like this. Oops, and then take out these lows and then head back up, leading up to the top of the range. So that's my opinion anyway. But you can always see, so, and that's where the timing occurs. So for example, if we are at like 11 o'clock and we've hit here, I mean, is it worth taking a long from there? Probably not. I'd rather wait to see where we are about 1:30, 1:45 when the US opens. And if that time we're down here, then I'd say, okay, now is the time to take the long and see what the confluences are. So again, timing is also very, very important. Again, if it's like 10 a.m. and we're like hovering around here, do you expect a reversal? Probably not. So that's the other thing that, again, why timing is important is you look at the time, look at where we are, and if it's just in that crucial time just before London Open or just before US Open, that's when you take the trade. So that's why timing is also very, very important. For example, like, theoretically, when this come back down here, you say, oh, okay, just before London Open, you can see this is a bit of a pump. But then we hit this daily, and this was what, 12 o'clock, and was this the best time? Potentially not, because you've got US Open just around the corner. What happens? It pops even more down, and just before US Open, it starts pumping a very, very healthy pump. So again, I expect the same thing today, that we may head back down, look at where we are about 12:30, 1 o'clock, just before US Open, look at the levels where we are, and then take the trade from there. Okay, so that's it. That's where we are in terms of high time frame that we're looking for. Let's recap. So high time frame, we're looking to go up. We've got monthly top of these zones, ideally this weekly here at 1.30. We have the Elliot Wave count as well that we talked about. And that's taking us roughly to about 1.31, just below 1.3. Remember, this is a zone level, so it could easily be a bit down, a bit higher. But around that zone, about the one, again, this weekly coming up, this 0.7 level coming up, so around this zone is where I would look for. I reckon that we would have start our wave 5 and head back down. So we've still got a fairly good distance to go, which is something like at least another 1.24%. So yeah, that could be done in a few days, so I don't see why not. So that's what we've got there, and in the normal, in the interim, in the short time space frame, you could head a little bit down to these daily weekly levels to take a long to go up. But remember, it depends on the time, depends on what time of the day we are in, or where we're heading. And then it's also good to have a look at the DXY to see what that's doing, because obviously, as you know, DXY is dumping, pound is pumping, and vice versa. So that's everything to keep an eye on as well. Right, so I hope you enjoy that. Let me know what you think. Let me know what could be done better. Let me know what you think of the Elliot Wave. My theory of that is, and I look forward to your comments. Right, guys, so have a good day, happy trading, and see you guys soon. Take care, bye-bye.